right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. I hope everybody's having a great trading day. TGIF, by the way, if I haven't told you, thank God it is Friday. Well, hallelujah, my friends. It is Friday. I'm really excited about today. Actually, we have about tonight, because there's 4 birthdays happening this month. We have like 25 people coming to our house tonight for dinner. Yeah. It's going to be fun. Whenever we have events like this, it's always a great time. Unfortunately for the host, which would be myself and my wife, it's a crazy day. It's one of those crazy days. So anyway, no, Miguel, it's actually tomorrow, but thank you very much. Thank you very much. I appreciate that. All right, let's get through the charts, shall we? We've got a lot to do. So let's go over to the euro dollar. And let's start there. So the euro. Okay, so the question is, well, how far are we going to go here? This is obviously, I'm thinking 113 may cap. I'm not sure if it will. I'm not betting on it. So let me start by saying I'm not going to short the euro dollar today. I'm still not very comfortable shorting the euro because right now I'm looking at currencies like this. This is gonna play out up towards 73 and a quarter, 74, 75 pence, right? That's the way this chart pattern should play out. It's a descending wedge. It's breaking out. I'm long. I'm adding to it today, just so you all know. You guys, you guys have a clear view of this euro pound? Okay, 161% extension on a weekly basis, on a monthly basis. We have a descending wedge reversal. It's very strong. So what does that mean? Well, that means the euro is going to outpace the cable. So what else does that mean? Well, that means that the pound could stay right where we're at. Euro could race up to 114. The pound could drop to 154. The euro could drop from current levels down to 111. A combination of that, maybe, I don't know, but I'm having a hard time reconciling getting short the euro dollar as you've got one of the most liquid currency pairs, which happens to be the euro pound, one of the most liquid currency pairs in the currency market. I would say it's top 8, if not top 5 most liquid currencies pairs in the whole currency market, showing a massive reversal. Okay, so when you have a currency pair doing this, it makes me a little skeptical getting in front of the euro dollar. I do think today 113 will cap. We may probe above it. You can see 113.03, just kind of like yesterday. Yesterday we got to 112.20, or we got to let me just share with you. We went to 112.15, as we had identified 112 was going to be big resistance. We went to 112.20. We came down to 111.85. We bounced around 112, right? I feel the euro dollar could do the same thing here at 113. We could, do this. 113, come back down, bounce around 113, and then figure out where we're going to go from there. So I don't necessarily know if I want to short the euro dollar just yet, but 113 should be resistance, just like yesterday was 112, 113, and we have that confluence of fibs. We have the golden fib, 161% extension, 786. Paul had pointed out, really big confluence, and plus we have this. I had to get my back scratcher. My back itched there. I have a back scratcher at my desk. I definitely keep one around. It's like one of the most handy things to have at my back. Since I'm not one that's going to get a massage anytime in the near future, so I sometimes have to scratch my back. There's a Randall said, "What's her name?" Janine. Why? Why'd you ask? Just kidding. That's what happens at 4 o'clock in the morning around here. All right, so we also have this descending trend line that's coming into play. I'm not sure if that's going to hold or not, but it's all intersecting at the same price. That's why if you want to short the euro dollar around here, I get why you do. I'm personally not too comfortable doing it, but that's me. All right, 113 is resistance. So where is support? Well, support now is going to be very fierce on any dip back down to 112, 15. You know, remember 112.20 was the spike high yesterday, but 112.15 was the high from over here, 112.14 or whatever it is. So 112.15 is going to be great support for those of you that want to buy it down at 112.15. It's a great place to be on the long side too. All right. We are still in a range environment. I know you go, well, God, Blake, the euro looks so bullish. You know, are we bullish? No, not yet. This is still a range, still a big flipping range. And you know, I mean, look, this right here. Here, I'm gonna erase these, but look, you know, we very easily be doing this. You know, downward sloping channel. You know, it very much can be in place. So is it'd be crazy to just mark it up or bullish right here, right at the top of what could be its range. Now it still could break out. I'm not saying it can't break out. I'm just saying it's a range. We've been stuck in a range since, you know, all summer long. So there you go. Andrew said, "Congrats on 25,000 Twitter followers." Do I have 20,000? I knew. Hey, I'm getting close. Yeah. Thanks. Worked really hard, Andrew. I appreciate that. It's been on Twitter for like 7 years. How many tweets have I done? 65,000 tweets. 65,000 tweets. It's a lot of tweeting. It's not like I tweet like every second of the day. It's just, probably, yeah, wow. But thanks. I didn't even notice. Pound. Okay, let's go over to the pound. I'm humbled. Too bad. Too bad 20,000 of those they're not even real people. I did have, for you English people, this was really cool last week. I noticed this last week because it popped up on my feed. My phone rang. My phone beeped at me and everything. I got followed by a soccer player. I can't remember what his name is because I don't follow soccer, and I don't even know what team he's on. But he has like 400,000 followers. He's obviously some star soccer player in England. He only follows like 250 people, and I'm one of them. And he's got like 400,000 followers. He's got the blue check mark, and I'm like, Greg in our chat room, who's he's from London. He knew exactly who he was. He's like, oh yeah, and I'm like, I have no idea who he is. But anyway, I thought it was kind of fun. My phone was buzzing, and I'm like, hey, who's that? Anyway, okay, here's the cable. Cable, once again, failure. I mean, how many times are we going to fail above the 157 level? The daily chart, if we end up bearish today, that's going to be a shooting star. So keep that in mind. The pound, while it's above 155.30, is bullish. Or not bullish, but it's supported. That's a better way for me to say it. 155.30, it's key support today. Resistance, 157.20. Okay. We are in a range. But if we drop below 155.30, that's going to really going to push some sellers. It's gonna get a lot of buyers out of the market. I think a lot of people that have been buying the cable, expecting this move, solid move higher to follow the euro dollar. They're obviously not looking at the euro pound right now, but there's a lot of people that are along the cable going, why isn't the cable going up? Why isn't it going up? Well, it's because you got the euro pound that looks aggressively bullish right now. So that's gonna really put a damper on the cable. 157, yeah, 157.20, right? Okay. Swissy. Okay, so you guys want to know why I added my Swissy today? And again, I don't even have a full-size position anymore. I don't. I'm long the New Zealand Swiss. I'm long the Aussie Swiss. I'm long the Euro Swiss. and I'm long the dollar Swiss. And my dollar Swiss was a really small position, but I added a little bit to it today. But we are at a 50% retracement. Look at all these spikes. Let me just grab a highlighter really quick. Spike, spike, spike. Here we are, 50% retracement. Also, let's go to the daily chart. Breakout point. So, breakout point, spike, 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 50%. You see it? Okay. We should get a bounce here, theoretically. So this spike low, whatever this spike low is, 95.25, key support today. Whoops, Swissy. 95.25, key support. Now, problem with these Swiss pairs, and Whit, his name's Whit. He's in our chat room. He was just like, well, so much for this, for Jordan, comments have fallen on deaf ears. But remember, yesterday's move was all dollar move. It had nothing to do with like the Swiss franc. The Swiss franc was just like, dollar Swiss was more just a product of dollar weakness, the last couple of days. The Euro Swiss actually looks pretty solid here, and the Swiss pairs are very much stabilizing. So if the dollar bounces, the dollar Swiss should bounce too. So if the euro dollar pulls back from 113 back to 112, then the dollar Swiss should bounce as well. Now, any bounce back to this support is going to find sellers. I mean, that's plain and simple. I'm trying to establish a position, and I'm only down 33 pips in my smaller than full size position. I'm trying to establish a position down here to be long or short the Swiss franc, basically. One of the other things that you may notice too, what I've noticed the last couple of days, look at this. Very, very strong correlation between gold and the Swissy. So here's gold, okay? Very, very strong relationship between the two. And gold is showing some signs of weakness up here, and I'll show you the reason why. Swissy might actually give us a bounce too. So the Swissy bounced back to 96. Well, actually, any bounce back here probably to 90, 95, 90, 95, 90. Yeah, we'll probably find some sellers. 90. I'll just write 96. Okay, but thereabouts. We're still we've gone from being bullish, and we went back into a range yesterday, but we are still in a really a big range here. Okay, with the Swissy. All right, now. What else? Oh, I wanted to show you gold really quick. Take a look at gold for those of you that are trading gold. Okay, so gold, see this downtrend line? Okay, see that daily candle? Watch it carefully. Okay, if we reject here and reverse today, watch the dollar. The dollar might get a little bit of a boost because of that. Just a little food for thought. Now if gold can get above 1165, that would be pretty bullish for gold. Okay, back to the yen. So the yen came under pressure. Obviously, equity markets have shown some weakness. So the dollar yen has pulled back. Finally, starting to see some volatility here. Big fib cut. Excuse me, I didn't mean to yawn on you. So we have 127% extension, 618 retracement on the daily chart. All of that comes in at 122.25. 30. I'll just write actually 122.30. Big support for the dollar yen. 122.30. Asterisk. If you want, and I'm not going to do this. I'm just saying if you want to do this, to buy the dollar yen, this is really your risk. Okay, so your risk reward down here is not bad. you think about it. You buy the dollar yen, you put in a stop around, like, let's say 122.20. Maybe target, actually I'd probably try to get a little closer to that support. You target back up here at 123.50 over the course of the next, few days. It's just a trade idea. I'm not doing it. It's just, maybe if we get really close to this 122.30, I'd think about it. But you can see it's starting to get attractive, to be long dollars down here, even the dollar yen. All right, let's go over the Canadians. Now here's where all the news is today. Whoa, peso? Is that it? Get the hell out of here. That's it? Oh my God, this peso looks like it's just going to rip heads off. Seriously, if the dollar catches a bid, I'm just saying this because I don't trade the peso. If the dollar catches a bid today, you got to watch the peso because that could be like a runaway freight train. Same with probably some of these other emerging market currencies, which I'm not going to look at just yet. But here's the Canadian. We have retail sales and CPI out of Canada today. I do not have any Canadian exposure. So let me say that again. I have none, zero, zilch Canadian exposure. I don't. It's been very choppy, and I just don't plan on having any Canadian exposure, not yet anyway. Now, this is support. This is trend line support. It's obviously been really choppy. That dotted line is the big monthly breakout point. Okay, so that support today comes in at 130 and a quarter. Oops. I didn't do the resistance for the dollar yen. Sorry, let me do that really quick. It's hard to say. Okay, wait. Sorry, just forgot to do this. Dollar yen. So that means this is going to be pretty key resistance around 123. Because we can break back above 123 and it could turn it back higher for the day. We are still in a big range. Okay, so now dollar Canadian. Dollar Canadian, big support at 130 and a quarter. 130.25. It is still bullish, guys. I know you're like, what do you mean it's still bullish? It's still bullish. What do you mean it's still bullish? It's still bullish. It's still bullish. It hasn't shown that it's turning bearish yet. It hasn't even showed that it's turning neutral yet. Relative strength is about to neutral. We could easily rip higher, and crude oil will see $38, and the dollar Canadian will be up at 134 tomorrow. Okay, I'm don't write off the dollar Canadian yet. I think it's a big mistake, especially with so much data coming out. Retail sales come in a little sloppy. Inflation's weak because of energy. This thing could be breaking to the upside. All right, big resistance right here at 131.75. Okay, let's go over to the Kiwi. Here's the Kiwi dollar. Oh, I have to talk over Alan Nuckman. If it's not one way, it's another. The guy on CNBC, we used to be on Wise Trade TV together for many years. All right, so and I feel like I had to talk over him years ago. Now I have to talk over him now. Oh, let me just turn down the TV. Wait, hold on. I'll mute him. Okay, there. I don't have to talk over him anymore. Okay, so descending trend line in the Kiwi, obviously offering some resistance. 67 cents. That'll turn us from being bearish to back to neutral. But we have to get above 67 cents today. Big resistance today. 0.6700. Big resistance in the Kiwi. It is still bearish. I know. Look, I'm long the Kiwi. I'm short the pound New Zealand. I'm making money. I'm actually long the Kiwi. I'm long New Zealand Swiss. Okay? I'm actually long the Kiwi dollar. And it's got a bearish trend. I'm thinking a turn back to neutral is coming, but we're not quite there yet. We're just not quite there yet. Now, support for the Kiwi. It's very easy to see now. Very easy to see. Very easy to see. Whew. Right through here. Okay. Um, Now, I'm assuming that we could get a dip down here and still be constructive for a possible move higher. But you can see how important 66 cents is going to be for today. Okay, let me turn back on the TV. Okay. All right. Aussie New Zealand, or Aussie yen, Aussie dollar. We'll do that when we get back. Okay. Realize what time it is. I got to go get some coffee. I'll see you back here in a few minutes. Don't go anywhere. All right, guys and gals. So we're good morning. You're listening to the Morning Edge webinar. I want to welcome you all back. This is Blake. All right, we want to get through the Aussie and the Kiwi. So one of the other things, and I wanted to mention this just so you guys, this, one of my hesitations here, let's just think about this really quick. Okay, so we got the Kiwi, right? You're looking at the Kiwi dollar and you go, oh, look at the Kiwi. It's still starting to look constructive. And this scares me too, because I am actually long New Zealand dollars. Now, not the New Zealand US dollar. I'm not, I'm long the New Zealand against the pound, as the pound New Zealand, goes down, which is great. I'm long some New Zealand Swiss franc. Okay, I'm underwater just a little bit, but it's not a huge. No, actually, I'm positive, but it's not a huge position. I'm actually up, a few pips. But what I'm scared about with the Kiwi, this chart, man, this is the New Zealand yen. This thing, if this thing breaks down, it's going to be epic. How can the Kiwi dollar survive if the New Zealand yen drops aggressively? How? I don't know. I mean, I guess theoretically it could. If if it was just dollar yen going down, and but I assume that when the dollar yen, if we have some like serious risk aversion and the yen goes bid and the dollar goes bid at the same time, this New Zealand yen is going to come crashing down aggressively, and it's going to pull the New Zealand dollar down with it. Same thing with the Aussie yen. If for those of you that are trying to get long the Aussie, and I'm long Aussie dollars, mind you, I am short the pound Aussie. I'm long the Aussie Swiss. I'm not trading the Aussie dollar at this moment. But think about this. If the stock market comes under pressure, we lose another, let's just say 5% over the next couple of weeks, the Aussie yen buckles, the Aussie dollar is going to get drugged down with it. It's going to happen. And so you're looking at the Aussie dollar going, hey, I'm going to get long and I'm looking for 76. If this stock market caves, you're toast. You are toast. Okay. So I just want to make that very clear, and you understand my hesitation in trying to short the dollar. We haven't, let me also remind you one other major component of all this. If a lot of traders have short-term memory as it is. What currency were we talking about? Aussie dollar. Okay. Traders have short-term memory as it is, but you take the market that really hasn't, when I say the market, you take the S&P that really hasn't seen any down movement in the last 3 years. Okay, really, you go from like right here. This is, we've seen nothing but up. Yeah, you had a little scare here, but that's just people go, well, I didn't do anything. You ain't scaring me much. Ooh, scary. Ooh, dip. We just bought it right back. The market doesn't understand what risk aversion is. And it's forgotten. It's totally forgotten. We start to correct, and people are going to go, holy crap! I need to buy dollars right now. I'm scared that this is going to get ugly, and they are going to go buy dollars, and they're going to buy yen. They're going to buy dollars. You're going to understand that the dollar is a safe haven currency. It's not acting like a safe haven currency right now because you haven't convinced the market that it's time to sell. You haven't convinced. Go okay. Go, go. I want you to go step in. For those of you in the United States, go step in a Bank of America Merrill Lynch um, branch. Okay, like with an investment banking arm. Go talk to your asset manager, your local asset manager. I know several of them. They're all soccer dads, and they live here in North Scottsdale, and they make 300 grand a year just holding $50 million of clients' assets. Okay, and all they do is they just push everybody into bullish ETFs. That's all they do all day long. That's it. Hey, you're in an IRA? Good. Let's convert that over to an ETF. Let's get bullish. They walk around, with their, Prada shoes and all this crap. Listen, you go talk to any one of them right now. Just take a step out today. Go to your local bank. Go say, hey, man, how's the market? Dude, bullish. Rough couple of days, but my clients are fine. They're pretty well diversified. They're good. It's cool. You guys want to buy something? I'm here. That's the attitude you're going to get from them. When that attitude changes, they go, holy crap, and they're getting phone call after phone call, like liquidate my accounts, put me into cash, and they're like playing defensive, like no, let's don't panic, don't do this, don't do that, and then clients are like, screw you, man, sell everything, put me back into cash. When you get to that mode, the dollar's going to look like it had a double dose of Viagra, okay, and it's going to go straight up. So I'm giving you fair warning. Markets have become very complacent. They don't know what risk aversion is, and they completely forgot. I don't even know what currency pair I was just talking about anyway. That's how bad the ADD is here in the markets. Okay? Does everybody understand? That's why I'm real hesitant about being short the dollar as the markets are coming down, because don't think the dollar has lost its safe haven status somehow. Like how did the dollar has lost its safe haven status? Has something changed? No, nothing's changed. Nothing. The market just not scared yet. Market gets scared, you'll see it. You'll see it. Okay. So anyway, that again, I guess I'm just pointing out my hesitation with like the Aussie and the Kiwi and everything really, and that's why I'm like, I want to be long the dollar. I just don't want to be along the dollar at strategic places. And I personally know that I should really be short the Aussie dollar. I'm just not, but I can't do it just yet because I still feel the euro might have some upside. All right. With that being said, look at the Aussie can't even make a higher high. Okay, can't even make it a higher high. So how important is this resistance right here? That high is 73.60. Okay, right now it's resistance. 73.60. I hope my comments aren't falling on deaf ears, guys. I just I want you to be very careful shorting the dollar while stocks are going down, because I don't know when the switch gets flipped. I'm assuming it's coming. And it's one day, one asset manager is going to go, not one asset, one institution is going to go flick, buy the crap out of the dollar right now, get long lots of dollars, and then it's just going to go bink, 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 and everybody's going to go, dude, time to get long, and then okay, 72.85 support. I'm assuming it comes sometime next week. Just my gut feeling. I don't trust my gut. It's getting a lot bigger over the years. It's gotten bigger, a little overpowering, but I still don't trust it sometimes. So, all right, here's the dollar. Key support coming in, 786 retracement, 94.60. I mean, we're on support right now, mind you, but I'm not going to write down 94. We're not write down current prices, but we're really at support right now. You can see the spike low here. We're at support. We're at the 618. Um, Here, just I'm trying to just so I can read the numbers. Um, 95.30 something. I mean, we're really right at the 618 retracement. Whoops. Wait. Hold on. There you go. 95.12 actually is a 618. But I had that. Did I have that? I didn't have that drawn. Oh, it's from here. I drew it from here. Bigger move, bigger picture. 786 goes a little further. 618 comes down a little further. Of the last move, though, the 618 comes in right. It intersects with that, or the 786 intersects right with that line. But we're at the 618 right now. We may find support here. I'd be more comfortable buying the dollar down here. Hopefully next week I get a chance to buy the dollar down there. Okay. Resistance right now is, what's that previous support? That low is at 95.92. So 95.90, 95.90. And we are very much in a range. All right. Let me take some questions. You know what? Hold on. You guys saw the peso? The Swedish krona, the bear flag in the Swedish krona is playing out just fine. Trying to anyway. Obviously, we're gonna see if that flag is going to start or not. It could very easily just stall here at the 50% retracement at support and then just start bouncing. It's entirely possible. So just keep an eye on that. I think. And you know what you got to keep an eye on? This damn Mexican peso. I mean, look at this thing. I mean, the peso, that thing has not backed off. I mean, it seems crazy to buy it right here, but it hasn't sold off. That's the thing. It's like it's not selling off. I mean, so if it's not selling off, I mean, do you just do you what do you do with it? I think it'd be a little crazy trying to short it, but at the same time, maybe it's about ready to go on an epic long run, which could very easily happen. And if that happens, we could have a runaway freight train type of move, here happening soon. So, and then you got, the Norwegian krona, things still holding up very well. It's like, do you really want to, do you really want to get short the U.S. dollar Swedish krona or U.S. dollar Norwegian krona right now with crude oil still looking very weak? I guess a lot of it depends what happens with the Canadian, but I'm going to leave those off. Here's your bias chart, and let me answer some questions. So going to the way back,